Hi everyone, let's have a look at my low time frame and micro scenario, starting with the low time frame bullish Elliott Wave scenario on Bitcoin, where we're looking for this to be a wave 1, 2, 3, 4 already in, and now working on wave 5 to the upside, where the most common target for a wave 5 is in between the 1.236 and the 1.618, which is between 31.5k and basically 32.4k, where we also have the 2022 range highs for some liquidity, which can be a very interesting target indeed. In this wave 4, we were then looking for this to be a wave A, B, C zigzag structure, which is a 5-3-5 wave structure, where the most common target for wave C is the white box over here, which has been very nicely respected. We also had the 0.5 fib over here, which is taken from the low of 2 to the high of wave 3, which is a minimum target for a wave 4. And as you can see on the 1 hour, it has been respected. Yes, we did have some wicks below, but we did not close a 1 hour candle below the 0.5. And also we had the key level over here, basically the range. As mentioned, this is a very important range to eventually find more upside, and it has been nicely respected as well. Now, also important to note is that so far we did not have any bearish divergences in this whole structure over here for eventually potentially more downside, or at least seeing some signs for a lot more downside. Because if I go to the CVD divergences to the 1 hour time frame, you can see that yes, we are making over here lower highs, but there's no higher highs on the CVD as far as it stands. So those are no bearish divergences. We actually have bullish ones where between these lows over here, we made a higher low on price, but lower lows on the CVD, which actually are bullish divergences, where the first target and actually the main target after which we then say, hey, the bullish divergences played out, is once price is going to take the highs over here of wave 3 at about 31k. So that is an important target for potentially the bullish scenario, where our potential trading setup was to ladder the longs inside this area over here. Stop loss was below the invalidation and then trading it to the upside. By now should most likely be at around break even. No financial advice, of course, but that is based on Elliott Waves. Not a bad idea. Also, I mentioned in the Discord group yesterday before I went to bed at, let's say, I think I posted it around here, that this range is taking quite a long time. So I'm starting to think, might this be a 3-wave structure instead of a 5-wave structure, which we will talk about in the micro scenarios in a second. So that is another reason why it is a good idea to at least put this at break even, just in case. The bearish scenario that I have over here is this being a 1-2-1-2 for eventually a bigger 3 to the downside. In general, at the moment as it stands, volume is still going down. Now that is quite normal in a corrective structure, that the volume over here, if this is corrective in maybe a 3-wave structure, volume is a little bit lower than in the impulsive structure to the downside. And we have here wave 1 still with the highest amount of volume, quite interestingly. But what I don't really like about this scenario per se is that this wave 2 has hit the 0.886 twice now. So it has been ranging here for a little bit, and then it came back to range here again. Usually that is bullish and not bearish. Because the 886, yeah, if price hits the 886 and then moves away from the 886 to the downside, the 886 is quite a valid target for, in this case, a bearish scenario where we can expect a bit more downside. But hitting it, going down, finding support on the golden pocket and then going back up is usually not that bearish of a sign. Even though price might still find a bit more downside, what I'm seeing over here is not necessarily something I like to see for potentially an impulsive structure in a 1-2-1-2 for more downside. The invalidation for this scenario is taking the high of this blue 2 at 30.5k. If we then go to this fixed range structure that I do like to show you, as I showed it in the previous low time frame video as well. The previous time I showed it, we were over here where I said, hey, we might have a little bit of an excursion outside this range, but once we go in, backtest this area and move to the upside, the next target is going to be the point of control, the range value area high. So price did manage to get in a little bit of a red candle here. You could say this is some sort of a backtest, but eventually it did move to the upside, point of control taken, and we stopped at the range value area high. And that's why I show it, because after the range value area high, we moved down, moved up again, and now we're moving down again. So we're hanging around that point of control where one could potentially also think, well, the range value area low might be a target again for price at about 29.9, 29.8k, where we also have this little 30-minute order block, as well as over here a 1 hour order block. If I go to the 1 hour and I show you this, we have a bit of a 1 hour order block here as well. So yeah, this could potentially still be an interesting area for a bit of a backtest also in confluence with the fibs that we have. If I put on these fibs, you can see the 0.5 and the 1 hour order block over here are in confluence with one another as well, but I'll talk about this a bit more in the micro scenario. So yeah, this is just interesting from a fixed range point of view, where also I do have to say that we do have some bullish divergences, by the way, on the 15-minute before I forget. But of course they can be leading, definitely not at the moment preferred per se, but between this low and this low we have a higher low, but on the blue line between this low and the low made here we have a lower low. So that is a bullish divergence, but I'm not too sure yet if I'm very fond of what I'm seeing on these local time frames. So let's go to the micro then, to get a little bit more clarity of also what I'm looking for and what I was thinking. So first of all, like last night, I saw this move to the upside, after which we then started to range. And this started to be very, very long. So that's why in the group I wrote, hey, this range is starting to be very, very long. So either, looking for a wave 2, but however, this 5-wave move to the upside, it's not very clear. It's not a great wave 5 count to the upside. So this might be a 3-wave structure as well, which I'll show you in a second. The reason why I think this is quite difficult to count as a very clean 5-wave structure is that if you would count it like this, where this is then the high of wave 3, we have 4, and then eventually wave 5, and this then being a 1, 2, 3, 4, 5, then wave 3 is the shortest wave. You can see the 1-to-1 over here of this wave 1 compared to 3, and 3 is shorter than wave 1, and it's also shorter than wave 5, which is not allowed from an Elliott wave point of view. So this scenario therefore is invalidated, and also the volume that we see is not following the impulse rules, because the highest volume of this move to the upside was over here, which is right at the end of the move. Now you would then think this is a wave 3 because it has the highest volume. Then we get a little bit of a 4, then we get a 5, then another 4, 5. And the reason I say it's then a 3, 4, 5, 4, 5, for example, is that in this particular scenario, you then expect this to be a wave 1, 2, and then another 1, 2, 3, 4, 5 in a bigger 3, 4, 5, right? That is the impulsive structure you're then looking for, but we didn't get it because price just continued ranging to the downside, and also having this as a 1, 2, this being wave 3, 4, 5 is a little bit weird as well, to be honest, because of this structure in the middle. So yeah, it's not very clean to count this as a 5-wave structure, and it's actually cleaner to count it as a 3-wave structure. Now in this particular scenario, nonetheless, we then expect wave 2 to move to the downside, where if we look at the fibs for wave 2 and I actually put them on the more common and rare ones, then the most common targets for wave 2 are between the 0.5 and the 786, which is between 29.8 and 29.4k, where currently the 382 has been hit, at least if the fibs are not on lock, even though I'm on log. If I put the fibs on lock, the 382 is not yet hit, and the invalidation is the low over here. If we then go to the second bullish scenario, which might be more likely in my opinion, because now this is a 3-wave structure to the upside, we then have some sort of an ending diagonal, which then is a zigzag in wave 1. So this wave 1 now has a 3-wave structure, where this is a zigzag in a W, followed by a very, very shallow X, very shallow X, before then another 3-wave structure in a Y, where the most common target then for this wave Y is between the 1 and the 1.236, which as you can see has been nicely respected if I take the pivots shown over here. Now after this wave Y and then a wave 1, we expect a corrective wave 2 over here, which either can already be finished as we hit a minimum target for wave 2 in an ending diagonal, which is the 382 then over, oh wait, that's actually not true, because over here if I put it on contracting, there we go, this is a rare target for a wave 2 in an ending diagonal, with the more common target and most commonly being the golden pocket over here, which is between or about 29.6k, also again in confluence with this range value area low that I took from here, as you can see, involving this whole range. So that is quite interesting as well. And also it would be a little bit of a support resistance flip of this area over here as well, where first over here we found resistance, moved down eventually to the upside, we could find support before then eventually more upside in potentially this wave 2 for then a ending diagonal scenario up for wave 3. And then still an interesting target is going to be those range highs at 32.4k. And the final scenario that I'd like to show you is an updated bearish scenario, basically, where we do have this as an ABC to the downside. And then from there, it's, let me actually put this one below. So we have this in yellow, an ABC, which is then either a wave W or a wave A, in a bit more bearish scenario, as we expect more downside. So basically what it means is, in a WXY scenario, this is only the first structure of a W. You then expect a wave X, which could already be finished. It's very short if this is a wave X, so one can more likely expect a 3-wave structure in X, before then eventually a move down in wave Y, so creating a 3-3-3-wave structure. Or this can also be then an ABC, with a 3-wave in A, 3 waves in wave B. Most common target for an expanding flat, or a flat in general, is between the 1.236 and the 1.38, which is between 31.5 and 31.8k, before then an impulsive structure to the downside in wave C, where the more, I guess, the more common target that I'll be looking for is this target box over here between 28.2k and 27.8k. So that is quite interesting. However, if we now continue pushing, it becomes a little bit less likely, because I do like to see a little bit of a clear 3-wave structure, and this 3-wave structure over here for wave X would be incredibly short. Not saying that it's not possible, but of course it is very short, so a little bit like of this would actually be nice. To be honest, and we did create a little bit of a double top, one could say here as well, for maybe a bit of a liquidity grab in case we might take the liquidity and then move down. So that is what I wanted to say. I hope this video was helpful or valuable to you. Make sure to check out the high time frame macro scenario video I made yesterday. Thanks for watching and subscribing, and I will see you at the next one. Bye bye.